Are new construction loans a thing of the past? Are banks so scared of what's going on today that they are not willing to lend for you to build a home? Now, with that, DGolden is here with me with Cornerstone Lending. We will be able to get all of those questions answered. We're going to go over some of the rates. We're going to basically address what you should anticipate and provide to a bank so you can get this type of home loan if it still exists, right?
Correct.
Right on. All right. So again, remember to subscribe. This way you're updated immediately when, or notified, I should say, immediately when we do these video updates for you. It is in real time. This will help you make the best business decision for you and your family. So with that, remember to subscribe and share us. Dan,
yes.
You got a question. People have said, oh man, I want to build a new house, but I just can't seem to get a loan. I just don't think it exists anymore.
It exists. Still exists. Some banks and lenders have started to shy away from them, but some haven't. So we haven't. We're still doing them.
Okay.
So there are loans available for new construction building. That's where you're buying a piece of land or you're buying a house that needs to be torn down and rebuilt, a new house. That's the borrower financing the cost of the build.
Okay, so I secure a piece of property.
Yes.
Okay, and I bring to you a budget from a builder because it has to be from a builder.
Correct.
Okay, so I bring you a budget from a builder. Correct. And I'm going to finance the whole thing myself, even though a builder is going to build it.
Correct.
Okay, that fits as a custom home construction.
That's right.
Okay, and you're telling us today that par pricing is about 3.75.
That's right.
And a minimum 5% down.
Correct.
Okay, now Dan, you have me put a little asterisk up here.
Yes. So that's of the total acquisition of the land plus the price of the home. You buy, I'll use an example to make this clear. You buy a $200,000 piece of land and you want to buy a $400,000 or you want to build a house that's going to cost you $400,000 to build for a builder to build, all in, having the land set up, building the house from start to finish, $400,000, land costs $200,000. That's $600,000.
Okay.
5% down on the $600,000.
Okay.
On that situation, it'd be like $30,000 down, something like that.
Okay. What if somebody wants to buy a piece of land that they want to build on, but it's going to take longer? So here's an example. We have some clients, Tim and his wife. They're looking at having to buy the land first because the process of, say, with King County, it's 6 months, 8 months right now to get a building permit,
right.
and the seller doesn't want to wait. What options do they have available?
The seller wants to get paid out before that 6 months.
That is correct.
So in the custom construction, the seller doesn't get paid until we are ready to get permits.
Okay.
So normally a custom construction loan, we can't really fund it until they have those close to having those permits. So in your situation, your example, they're going to have to buy that land in another fashion so they can be the owners of that land.
Okay.
And go through that 6 month process, and then we can close the construction loan after the 6 months. So what they need to do is either use their own funds.
Okay.
If they have them.
So cash purchase.
Cash purchase.
Okay.
They can pull equity out of other property they own.
Okay.
Say
so
they own their own single family house right now, or
okay.
type of home. You can pull cash out of that through a home equity loan or a cash out refi, buy the land, and then do the construction loan, pay that loan back.
Okay.
Something like that. Or obtain a land loan, which unfortunately I do not do land loans, but there are land loans out there. I can refer you to people who do them.
Okay.
Typically 20% down on the cost of the land only.
All right.
So example of $200,000, they would be $40,000 down.
Right.
That down payment gets credited towards the construction loan.
Ah.
So they don't have to. In that situation, they would be have already put their down payment on the construction.
Which would make perfect sense, right? So it's not like they have to do 2 down payments for a loan. Oh, that's an excellent bit of news.
Equity as they're down.
Okay, perfect. So hang on a second. Something you said just kind of triggered a past client question, and that is, are they still doing cash out refis? Because you just said a cash out refi to buy a piece of land.
Yeah. So there's been some media out there that's I've heard newspapers and some things on TV that lenders are no longer doing cash out loans. It is not true. Some lenders aren't. Most lenders actually are, but a lot of lenders aren't. So we are. So some lenders have chosen to stop doing cash out refis. I'm still doing cash out refis. I do them all the time. I've quoted some this week. So there are cash out refis available for people.
Okay. Yeah. All right. Next one.
Yep.
Builder resale, whether it's in a plat or let's say it's a builder that says they have a piece of vacant land. They're saying, hey, you know what? I'm going to build this spec home, and if you come in and buy it, then you just have to get all of your financing done and whatnot. What are we looking at for rates and minimum downs?
So this is more like a typical purchase of a normal. It's like a resale purchase. It's just the builder's building the house for you, and you're waiting till they're done. They're using their own money to finance the cost of building. That's the difference between the first one we talked about.
Right.
The first one, you're actually financing the cost for the builder to build it.
And this one, the builder's financing.
Obtaining their own money to build the house.
Right.
You're just buying the finished product when it's complete. That is more like a typical resale loan, like what you hear about all the time.
Okay.
The rates are good, 5% down, sometimes 3% down if you're a first-time home buyer. Rates are in the low 3.125-ish right now. The only thing to be careful on with that one, which I don't think is a big deal right now, is that sometimes you need there's a 3 or 4 month outlook before that home is going to be finished.
Right.
And a lot of times people want to lock in the rate.
Right.
For that long of a lock of a rate, there's a cost for that. There's a premium for that.
Okay.
Just to have the rate that we have today, for them to receive that rate 4 months from now, there's a cost to do that.
Okay.
We have a program that allows you to lock in with a free float down if the rates get lower.
Okay.
But again, there is a slight premium to do that program. But I don't think rates are going up. I think they're going to be flat or down.
Okay.
I would advise my clients to just not lock and hang tight.
So stand fast.
And wait till you're like 60 days out where that long-term premium goes away about 60 days
Okay.
out.
All right. We just had a question that was asked. So on a builder rate, this right here, the builder is holding this this financing. So there's no technically money per month out of the pocket of the buyer, right? This is like a traditional buyer-seller situation, okay? Albeit it could take up to 6 months to build a house.
Right.
All right. This one, where the buyer is technically building a custom home, this is going to start accruing interest upon funding. So does that mean, so let's say I'm going to build this house, okay? And I own a house right now. Does that mean that I need to make now 2 payments?
There are options where you don't have to do that. So as you're borrowing this money, because you're borrowing it initially, like back to the example, you're going to initially borrow, say, $200,000 for the land, right?
Mm-hmm.
We're going to finance that land right away. We're going to pay off that seller.
Okay.
So you owe $200,000.
Cha-ching, right off the bat.
You're paying this interest for that first month only on the 200. Now the next month, or 2 months later, you start adding other costs.
So we got our foundation, our framing.
Now your loan's 250. You're going to pay interest on that portion. You only pay on the portion that you're utilizing. There is an option on construction loans where you can basically put those interest payments into the project itself.
Okay.
As a cost.
Okay.
And you won't physically have to make those payments. Interest will just accrue on the loan. It'll add to your loan that whatever that interest cost is.
Right.
And you have a higher loan at the end, but it allows you to not have to make double payments.
Which would be, so somebody who is financially capable, but that would make things super tight. This is a way for them to leverage so that they're not under that burden, of the monthly payment as the construction goes on.
It allows you not to make double payments, essentially,
right.
If you're not able to do that or not comfortable doing that.
Okay, and then of course, if you have the financial wherewithal, absolutely you can do it just to keep everything mitigated.
Absolutely.
Perfect. All right. Now we put down a third one, rehab. Okay. Tell people what a rehab loan is and kind of what are the benefits to it.
So a rehab loan is very somewhat similar to the custom loan, but you're buying a home that's maybe in really bad shape.
Okay.
And when I say bad shape, what that means is it won't allow for normal traditional financing. So there's something enough wrong with the home where a lender won't allow a loan to close on it. Maybe the roof's falling in, maybe the foundation's bad, maybe there's major water damage. Lenders won't finance those properties until those items are fixed.
Brought up to speed.
Right.
Okay.
So there's rehab loans, what they call rehab loans, where lenders have said, okay, well, that's a problem. We're catch-22. Don't have the money to fix the big problem. Either the seller or buyer doesn't have the money to fix it before closing, and we can't finance it. So we have rehab loans that allow you to purchase that home as is and finance the cost to make those repairs.
Okay.
Very similar to the custom construction. You have to get a builder that's going to come in there, or a contractor that will come in, a professional that we approve, easy to approve, but we approve, that says, okay, these items, these punch list items that need to be completed for the lender, they cost X.
Right.
And now, also, by the way, we want to add a extra bedroom on top of that.
Okay.
You have a needs list, a required list, and a wants list.
Right.
You can actually make it into the home like a custom construction home, custom home.
Okay.
Within the rehab process. So you have the mandated stuff and the stuff that you want.
Right.
You can pick your colors. You want to update the kitchen. That's maybe not a requirement. You can do all that. You build that into the cost of rehab, add it to the cost of the home, similarly to the
new construction
population we
custom.
talked about.
Yep.
You add that all together, and we do 5% down on that. There's actually a 3.5% down option too. FHA allows a rehab loan 203K for 3.5% down of that. But it's the entire project cost to get it into good shape. You close on the loan, you own that house, similar to like owning the land.
Right.
And then you implement the construction.
Okay. So in the initial example, you said, if the roof was falling in, or, the foundation was cracked. What if structurally the house is in fine shape? Yeah. It's just, it was built in 1965 and it is era consistent. It has not changed. And era consistent. That's my polite word of saying it's extremely outdated. All right. So we've got this era consistent house, and Joe and Annie come in and they want to update the kitchen. They want to update the bathrooms. They want to put hardwood floors, and they want to paint it. They want to put a couple of windows here. Right. Is that qualify for the rehab loan?
It does. You can do that. You can do that. Yes.
Okay. However, I'm hearing a however.
The reason I hesitate on that is because there is a lot of, to do a rehab loan, you really want to make sure that that's cost efficient. Essentially, you're going to be paying a higher rate.
Okay.
You're going to be paying a half to, almost 3/4 in rate higher for a construction or a rehab loan, right?
Right.
So if you can buy that house, as is, and
as long as it qualifies,
the lender will finance it.
Yeah.
And do those things after the fact. It might be an easier option.
Well, how would they do that?
They could put less down. We could figure out other ways to do it, and that might not work. If their only option is a rehab loan, that's totally workable. Because you have to understand that if a home, in my opinion, today with the way the market's in such demand, the home can be normally financed and not a rehab loan, and you have two buyers. One's buying it without rehabbing, and one is.
Right.
The one without rehabbing is probably going to win.
I understand.
Because there's probably there's a 3-month close process.
Okay.
So that's one of the things that they figure out. So if you come across those situations, let me strategize with other options to avoid a rehab loan if possible.
Okay.
It's higher costs, longer closing, and unless it's
more constraints.
Because
if you're a handyman and there are things you want to do, that could be limited to your skill sets. All right. So maybe are you talking about maybe doing a second as an option?
You could do a second after the fact, or really what I typically see is like people are coming in with 20% down on this new house they want to buy, but they want to remodel it.
Right.
Let's do 10% down and maybe buy out the mortgage insurance, something like that, and use that extra 10% to rehab it.
Which would almost be a wash.
And then at the end of it, if there's a chance that the value goes up by doing that rehab, they could actually get rid of that mortgage insurance another way, or we can refinance it, something down the road.
So we actually had a client that we did that, right? So she bought it. She did the updates. And then after she did amazing things to her home, right? Good job, Beth. Then, not that we're going to mention names, right? Then she refinanced because she was able to then drop the MI, right? Because she had increased the value of that home so much,
That's right.
which is a brilliant move, which is, I think, what you recommended to her.
And you do not have to wait any length of time. You buy a house today for $200,000 and you put $50,000 into it and it's worth $400,000.
Right.
We use $400,000 and we can pay off that initial loan and remove the mortgage insurance in that example.
That's brilliant.
So it's a good way to go. And there's also no cost options on the front end.
Right.
So you're not paying closing costs twice. There's ways to avoid that.
Oh.
I can explain that to you as well.
So I buy that $200,000 home. I actually pay a little bit more in rate so that I keep that money in my pocket. That example of $4,500.
Right.
I can reinvest that into the house, knowing that that's going to help add to the improvement of the property.
Right.
Boom. Then refinance and buy get that lower rate at that point.
Lower rate and remove mortgage insurance if you have it.
That's just money smart.
Yep, exactly.
Right on.
And I think rates are going down slightly, maybe not a ton, but flatter down in the near future. So
Okay.
there's not in my opinion, there's not a huge risk of rates spiking or something like that.
Okay, perfect. All right. So remember to subscribe. Dan's information will be put up regarding custom new construction homes, builder resales, and then of course those folks looking at a fixer or a rehab, different options to consider. And in the meantime, if you have any questions, post them up there. Again, we'll put Dan's information so you can reach out to him. Have a safe day. I will see you on the next video. Take care.